Ali, you're going to invest $250 million. You say you're expecting $1 billion in revenue. Talk to us about how this partnership is going to differentiate you from what's already on the market.
Yeah, so this is, we've only had one partnership this big, and that was 10 years ago with Microsoft. So we think this is going to be game-changing for the industry. So when we talk to our customers, we say, oh, we have an amazing platform, it's great. They always say, but what about the SAP data? Because SAP's data is the most important data in the world. It's what's powering all the ledgers, all the financial systems of over 90% of Fortune 500. And this data has sort of been locked away and people couldn't access it. So what the partnership means is that anyone that goes and now buys SAP Databricks from SAP will get all this data accessible right there, and they can start building agentic systems, AI, and so on. So that's why we're so bullish on it, and that's why we earmarked the $250 million, as you said, from our $10 billion fundraise that we just did.
Another important partner of yours is Microsoft, and it's increasingly becoming a competitor. It said that it's using its product, its Fabric. It's going quickly. What's the pitch to use Databricks rather than Fabric?
Yeah, look, Microsoft's a great partner, but still remains a great partner. They're actually an investor in Databricks as well. So is, by the way, AWS. So is also Google. But there's competition, as you pointed out. They have sometimes their own products. The great thing about SAP Databricks is that you have now all the SAP data in it there. And you won't find that in the other offerings. So the other offerings out there in the market will not be there with all the business data that SAP has, and it's been enriched with all the semantics. So what I mean by that is this is not just data on the financial ledger of a company, it's also the travel system, because SAP has a product called Concur. They have success factors for HR. They have Ariba for procurement. All this data has been combined and enriched, and it's just available in SAP Databricks. So that's the big difference between using SAP Databricks and using any other data platform out there.
Ali, there's been a huge conversation lately around inference cost, and I'm wondering if you've seen inference costs go down. What does it mean for Databricks?
Yeah, inference cost has been going down all the time, last few years, and we have a whole research team dedicated to just optimizing the software portion of that. There's, of course, a hardware portion. We don't build hardware, but the software portion is actually significant too. We're seeing, 2.5 to 3x boost just in the software. What does it mean? Well, what it means is that it's just much cheaper to build applications on top of AI. It's kind of crazy if you think about it. If you zoom out, what it costs is less than $1 to produce 1 million words. That's basically 3 books. You can get the AI to produce 3 novel books for you for less than $1. So that's what cheaper inference means, and just unlocks all these applications on top. So that's what we're excited about. But for those applications, you need special data, and that's all that's going to matter. And the enterprises have all this special data. So the question is, how do you combine that AI with that special data that they have, and then, of course, with the inference so that you can build these AI applications?
Well, as we heard from Jackie, you recently closed this $15 billion funding at a whopping $62 billion valuation. Is that it for fundraising? Is that done?
Well, never say never, But it's a significant portion that we've raised. Now I think it's more important for us to invest it wisely, invest it in AI talent, invest it in building AI systems, invest it in go-to-market, expanding around the world. And we have significant business in Europe and in Asia, in Latin America, so continuing to expand. We're about 8,000 people. We want to grow very fast. We're still hiring. So that more focus on that, but never say never.
Ali, we're seeing some reporting coming out of our colleagues here on the venture capital team that late-stage startups are actually kind of struggling to get additional funding because of just this dry up in IPOs. What's the future for Databricks? Is that coming down the pike for you?
Well, I've said many, many times, we will be a public company. There's no doubt about it. So it's not a question of if, it's a question of when. But the thing is, we're not trying to time the market. We're trying to win the market. So that's what we're focusing on. We've raised all this funding. Now we're going to use it. We did this big partnership with SAP where you can get all this most important data in Databricks. Now we want to build AI for our customers and make them successful. That's the focus. How do we win this market?
What kind of milestone are you setting for yourself before you actually get to the point where you tell investors that you're ready to go public, that you're ready?
I mean, we are ready. We could press a button and we would be public today. It's really sort of a question of what's the priority right now and how much benefit do we get out of going public. this fundraise that we just did, the 15 billion that you just referred to, we're also using a large portion of that towards liquidity for our employees. So, we're solving the liquidity problem. We're solving investing in, our business, in our product. So, there's not an extreme sense of urgency. But we evaluate, every day. If it's in our interest, we will go. If not, we'll stay private. I do think, my guess is that we will be public, and it's not going to be too far in the distant future.
How far in the distant future? 2025, 2026? What can you tell us?
Yeah, I would say the earliest would be probably this year. But, I think that's unlikely. That's all I can say. And then, but I don't think this is like a 5 years out thing.
But still, I just want to confirm, the option to raise more money before going public, if you need it, is still on the table?
Look, when we did this fundraise, we weren't sure there was going to be enough interest. In fact, we were, maybe we set the price too high and there's not going to be enough capital. That actually happened to some other late stage companies that tried this a year or two ago. So we were worried about that. And we got twice the amount that we wanted to raise in interest. We got close to $20 billion of interest. And the problem was the investors kept calling me and saying, please don't cut me back. Let me allocate the full amount that I want to put in. Let me put 1 billion. Let me lead this round. So the interest for AI and data is just insane. I have never seen anything like it in, the 10, 15 years I've been doing this. So there's a lot of capital out there, but they want to invest it towards AI. So you're right. If you're not in AI, then it might be a completely different story. So it's sort of a tale of two different cities. The AI companies where there seems to be infinite amount of interest, and then a non-AI companies where, there's it's sort of not great. It's not growing. They don't want to invest.
Right.
Multiples are depressed. So unfortunately, it's like that right now.